Hello, and thank you for joining the University of Maine and the University of Maine at Machias Office of Student Financial Aid. Today's video, we are going to be going over financial aid special circumstances and financial aid appeals. So just a little bit of an overview of the items that we're going to cover in this video. First, we're going to talk about what is professional judgment, what is a financial aid appeal, and what are financial aid special circumstances. We're going to talk about who is eligible for a professional judgment review. We're going to go over some examples of special circumstances, and then we're going to walk you through the entire process of how to submit a financial aid appeal. So first, what is a financial aid appeal? What are special circumstances? And what is financial aid professional judgment? So first, we're going to start right with the free application for federal student aid, the FAFSA. We know that that is the only application that is used to apply for financial aid at the University of Maine and the University of Maine at Machias. And we also know that it requires income information from 2 years prior whenever you're actually filling it out. And that is what is used to determine your financial aid eligibility. So what you're eligible for in terms of federal, state, and institutional financial aid. So if we use the 2021-2022 FAFSA as an example, when you submitted that to our institution, you used 2019 tax information. So again, 2 years prior. So we as an office, as financial aid advisors, we recognize that the FAFSA may not always represent the accurate picture of what a student or families are actually able to contribute to higher education. We understand and we totally recognize that in 2 years, a family's financial situation can change dramatically. And that FAFSA isn't always an accurate representation of your financial situation. So to recognize that, we recognize that the federal government has given financial aid administrators, and when we say financial aid administrators, we mean financial aid advisors, so anybody who works with financial aid. So the Department of Education has given us the authority to take into consideration these special circumstances that may not be reflected on the FAFSA. We use what's called professional judgment, and we are able to look on a case-by-case basis, provided that we have adequate documentation to support the special circumstance, and maybe make adjustments to a student's financial aid eligibility. So before we go over some specific examples of what special circumstances there are, first let's talk about why recognize special circumstances, why go through a financial aid appeal process. So there's one of two goals. So the first is to potentially reduce a student's expected family contribution, or EFC, to allow potential eligibility for additional federal need-based aid, so specifically the federal Pell Grant or federal direct subsidized loan. So let's take a step back here and talk about the expected family contribution and what that has to do with a student's financial aid eligibility. So we know that when you submit the FAFSA, all of that information is put through a big old equation at the Department of Education, and it produces an expected family contribution, an EFC number. Now, it is this EFC that is used sort of as like a benchmark to determine eligibility for different federal, state, and institutional aid. So we know that if that EFC was calculated based on information that isn't accurate based on what your current family situation is, then potentially, if we were to change your family information on the FAFSA, then that EFC would also change. So the first goal is something what we call an EFC adjustment appeal. And so the goal is to lower that EFC to get it within either federal Pell Grant range, which is additional grant funds that the student would be eligible for, or within federal direct subsidized loan range. So if the student was only offered federal direct unsubsidized loan, getting that EFC down low enough so that we could move some of that unsubsidized loan to subsidized loan. So then the second type of appeal that there is is a cost of attendance appeal. And so the goal with this type of appeal is to increase a student's total cost of attendance, or COA, to allow for potential eligibility for additional loan borrowing. So again, let's take a step back and talk about the cost of attendance. So all students have an annual cost of attendance. And this is basically a standard allowance for how much we believe that a student will need in financial aid for an academic year. So the cost of attendance includes components like tuition and fees. So our standard cost of attendance is based on an estimated 15 credits per semester for undergraduate students. So that's automatically built into that cost of attendance. Things like room and board, whether it's on campus or off campus, books and supplies. There's also a travel and miscellaneous component in that standard cost of attendance. Now, the federal government says that a student cannot have more financial aid than what their total cost of attendance is. So let's say that you have reached the maximum amount of financial aid that you can have for an academic year. If you potentially have additional expenses beyond what we already budget for in that standard cost of attendance, we can potentially recognize that, and that would open up additional room within that cost of attendance allowance. Now, this is really important to note with this type of appeal, is that you're not getting any additional aid when an appeal like this is completed. Instead, you're really just getting potential additional loan eligibility. So you could, if you still have unsubsidized loan eligibility, you could borrow more of that, or you could potentially borrow other types of loans like a Parent Plus loan or an alternative loan. Okay, so here are some specific examples of special circumstances for potential EFC adjustment appeals. So that was that first category of appeals that we talked about. Now, before we get into these, I do want to note up front that even if you fall into one or more of these categories of special circumstances, that does not guarantee that your financial aid will change. What it does mean is that it's definitely something we would want to take a look at to see if there is an impact. And this is not the final list. This is not everything that exists for an appeal. These are just some very common examples that our students encounter, that we've encountered as a financial aid office. So we've got a change in income, or a loss or change in employment status. So anytime there's a major change to the income information, that is potentially information that could impact the expected family contribution calculation. If there is a divorce or separation or a death in the family, that impacts the number in the household and again, the income information that was originally provided on the FAFSA. Again, that's something that could potentially impact the EFC. Medical and dental expenses that are not covered by insurance. So this would be any out-of-pocket medical or dental expenses that a family has for a given year. These are things that we can potentially take into account in a family's AGI, the adjusted gross income portion of the FAFSA information. And again, that can directly impact the EFC. So this would be for dependent students. So parents of dependent students, if they have their own college expenses that they have out-of-pocket payments for, or also if those parents of dependent students are currently making educational loan payments for their own educational loans. Those are potentially items that we can recognize. So parents, again, this would be of dependent students. So if the parents have other dependent students that they pay private school tuition for elementary or secondary school, those are potentially items we can recognize. Any sort of one-time payment or income and child support paid are also items that we can potentially recognize for an EFC adjustment. All right, now on to our next type of appeal that we talked about, the cost of attendance adjustment. So again, these are some common examples. And again, I do want to note that even if you feel like you have additional expenses related to these items, that does not guarantee that we will automatically be able to increase the cost of attendance. And I do want to emphasize that any of these expenses that we already budget for in our standard cost of attendance, we would only potentially be able to recognize any amount greater than what we already budget for. So let's say you are taking more than 15 credits per semester. We can potentially recognize the tuition and fees in the books and supplies associated with those additional credits beyond 15. Childcare expenses, we can recognize a one-time computer or technology purchase in the cost of attendance. Any sort of course-related equipment and supplies, again, that we don't already recognize in that standard cost of attendance. A student's medical or dental expenses, again, this would be specifically out-of-pocket expenses. Car insurance in the student's name, car repairs in the student's name are also items that we can potentially recognize. Travel expenses, this is related really specifically for out-of-state students who may have additional expenses as a result of having to get to campus and then get home for breaks. Study abroad expenses or travel course expenses, those are also items that we can potentially recognize. And student health insurance that is paid by the student, we can also potentially recognize for an increase to the cost of attendance. Okay, so we talked about the specific circumstances, some specific examples that fall under special circumstances. Now we're going to talk about who is actually eligible for professional judgment review. So for potential EFC adjustments, it's important to note that really the majority of our EFC adjustments are occurring with undergraduate students. The reason for that is because most graduate students, they do not qualify for need-based aid. So when a graduate student submits a FAFSA for an academic year, the only types of federal institutional aid that they're eligible for is federal direct unsubsidized loan, which regardless of what the EFC is for that, they would still qualify for it. So that is why the majority, I would say 99.9% of our income reviews, our EFC adjustment appeals are with undergraduate students. So, and we're splitting up the undergraduate students by their financial aid dependency status. So if you are an undergraduate dependent student, so you're dependent based on FAFSA, which means you're required to provide parent information on that FAFSA. What we're looking for is a significant change in the parent information from the FAFSA. And the reason for that is because really that parent information is what drives that EFC in the majority of cases. So for any potential change to the EFC, it would need some sort of significant change to the parent information. For an undergraduate independent student, so again, this would be an independent student for financial aid purposes, so not required to provide parent information on the FAFSA. We would be looking for a significant change in the student's information, or if they also have a spouse and their spouse information is on FAFSA, there would need to be a significant change in the spouse information. So for both categories, both the dependent and independent students, really the student needs to have greater than a 0 EFC. So let's talk about that component of the eligibility for a moment. So if a student has a 0 EFC, regardless of if they're dependent or independent, they have the lowest EFC possible. If we remember back to our conversation about what the goal of an EFC adjustment is, remember, we're trying to lower that EFC to get the student within federal Pell Grant range or potentially additional federal subsidized loan eligibility. So if a student already has a 0 EFC, we would not be able to adjust that down any further. They already have the maximum amount of federal Pell Grant and federal subsidized loan eligibility that they can have. So even if the family falls within those one of those special circumstances examples, if they have a 0 EFC, there would be nothing that we would be able to adjust from the FAFSA information to get them additional financial aid. Okay, let's talk about the potential cost of attendance adjustments and who's eligible for those. So again, we have our undergraduate, dependent and independent students, but also graduate students can potentially submit a cost of attendance adjustment appeal. And really the big thing here is if a student is considering a cost of attendance adjustment appeal, we would be looking for significant student educationally related expenses that are not already reflected in a standard cost of attendance. And I just want to emphasize this one more time, that when we are potentially looking at increasing a student's cost of attendance, we are looking for expenses that are beyond what we already budget for in our standard cost of attendance. All right, so now let's talk about how to submit a financial aid appeal. So the first step, and I think this is definitely the most important step of the process, is to contact the financial aid office. So if you've looked through those special circumstance examples and it looks like you qualify to submit a financial aid appeal, I highly recommend you contact our office and talk with one of our financial aid advisors. What our advisors will do is they will gather information about your situation. So we'll ask about dates and amounts and other items that may be important to the situation. And what we can do is we can actually estimate based on the initial information that you're giving to us, either over the phone or over email or during an advising session. And we can estimate to see if it would be worth your time to move forward through the financial aid appeal process. So if an appeal is recommended, then you'll move to step 2. So step 2 is very important. It's collecting and completing the appeal documentation. So if you speak with a financial aid advisor and they determine that, yes, you do potentially have a special circumstance that would impact either the EFC or the cost of attendance piece, then there's a couple items that we need that you will need to submit to the financial aid office for us to review. So the first is a financial aid appeal form. Now, most times when you're having that conversation, that initial conversation with the financial aid advisor, they will send you directly the form that you will need to complete. Also, though, you can check out our financial aid website, and we have all the different appeal forms there as well. In addition to the appeal form, we always ask for a detailed letter of explanation. So a letter from either the parent or the student, just detailing what the situation is, what the special circumstance is. We always like to have a clear understanding of what is actually going on. So including things like dates or amounts and things like that are really important. In addition, we do require supporting documentation to support that there has been a change for that special circumstance. So a lot of times, especially related to the EFC adjustments, we are requesting tax information, so federal tax returns that may have been filed, W-2s, pay stubs, unemployment statements, and there may be other official documentation that we need to support the appeal request. Now, on the actual appeal form, when you're filling it out, based on which category of special circumstance you are submitting the appeal for, we actually we list out specifically the supporting documentation you will also need to submit. And then step 3 is really to monitor, the student should monitor their account for the appeal response. So what will happen is you'll submit that appeal, the letter, and the supporting documentation to the Office of Student Financial Aid. And we have a group of financial aid advisors that we call our appeals committee, and they will review that information for you. Now, just sort of a timeline, once we receive all the appeal information, it can take up to 30 business days for our appeals committee to review the information and to make a final appeals decision. But it's really important that in the meantime, that the student is monitoring their appmaine.edu account as well as their Main Street account in case additional information is needed. Now, if additional information is needed, one of our financial aid advisors from the appeals committee will reach out directly to whoever submitted the appeal to let them know, hey, we need this or that in order to move forward with reviewing the appeal. And that really is the financial aid process and the different kinds of special circumstances that are potential areas that we can recognize for either additional aid or open up additional eligibility for a student or family to borrow loans. Now, here is our final page here with our contact information. If you believe that you have a special circumstance or an appealable situation, please, please, please reach out to us and talk to one of our financial aid advisors about it. You can reach us by phone. You can reach us by email. We also offer one-on-one advising sessions with our financial aid advisors. So you can either come into our office at Wingate Hall, or you can schedule a Zoom advising session if you're not in the area. And then also we have some really great general information about the appeals process on our website. So please contact us if you have any questions. And thank you so much for joining us today. Bye-bye.